Welcome to the Collecting Keys Real Estate Investing Podcast with your host, Mike DeHaan and Dan Austin. From wins, losses, horror stories, and tactics for optimizing your business, Mike and Dan take a real, uncensored deep dive into the ins and outs of running a full-time real estate investment and wholesaling business.
What's going on, guys? Welcome to this episode of the Collecting Keys Real Estate Investing Podcast, Mike and Dan Show. I am Mike DeHaan here with my co-host, Dan Austin. This is your first time here. This is our Wednesday show where we talk about our business, all business, real estate, investing, and everything in between, or whatever just strikes our fancy this week. So welcome, and
Welcome to our show.
Welcome to our show. So, anyways, this is the first show we are recording after the new year. I guess when you guys listen to this, it will be a week or so into the new year. So by now, if you're like the average person, you will have given up on your New Year's resolutions and decided that you'll do those next year or at another point in your life.
You already canceled your gym membership.
Yeah, right. I know. I'm not gonna lie. I've been seeing some of the videos that people are posting. I'm so grateful that I have a garage gym just to not have to deal with it.
Oh my goodness, yeah. So much. I haven't gone to a public gym in, dude, I don't know how long. I kind of want to go back, like not right now, but I've been thinking about this. Maybe I should go do some drop-in workouts at some gyms just for the social aspect of it. But like I haven't, it's probably been 6 years since I've been to like a public gym.
That's a long time.
Maybe more than that.
I like going to public gyms. Like specifically when I travel, like I like going to like random gyms and miscellaneous places. I always feel like it's a good way to get like a general view of like the fitness culture in the area, or that may or may not exist.
Yeah.
But
yeah, I just think it's like nice to like meet other people.
Yeah.
Other adults.
Yeah. But I mean, it is good networking though. Like, especially if you go to like a boutique gym. So like when I used to coach at a CrossFit gym, you can meet like legitimate people, especially if you go to the like midday classes, like the like 11 a.m. or like 12 a.m. classes or 12 p.m. classes, because you're going there with the people that have the freedom to go to a workout class in the middle of the day. You know,
they're the doers that can afford a boutique gym that now have the ability to prioritize health.
Exactly. And it is always either the like moms, like stay-at-home moms with like new babies and they're squeezing it in, right? Or it is like,
and they have the real estate card.
Yeah,
they're real estate
exactly. Yeah, I mean that too. They're
moms, real estate, part-time real estate agent.
Yeah, it's always either that or it's like the business owners, like the dentists, like the people with money that can be like, yeah, my office is closed right now and I'm just going to go do this thing. And I made like good connections back in the day because I was started in real estate when I worked at the gym. I mean, that's how I met one of the realtors that we've worked with several times. That's how I've met. It's like one of our main private investors that we've used for several deals now all came from the gym. And those are connections that, you know, are purely just made in that environment.
Did you meet our bookkeeper at the gym?
Yeah, actually I did. Yeah.
There you go. See? Yeah. I can't remember how you met him. So
yeah, it's funny. I think I met him at the gym once and then I stopped going to that gym shortly after that and then just like connected with him more down the line and just like different.
But you're like, things. Dude, I love that guy so much.
Yeah.
I want to call him. I met him one time. I think there's something there. I'm going to build a relationship based on that.
That's not how it went at all. Basically, I had my friend group that was all connected to the gym, and he kind of like worked into that at some point because he vibed with all the other people, and then he just started showing up to other stuff that like the group was doing, and then we hit it off. But
he was the rando.
Yeah.
He was the rando.
He was.
Who's that guy?
He was the rando.
Who's that guy? Yeah. I like this guy.
Yeah. So anyway, New Year's resolutions, fitness resolutions aside, we are hot on trying to figure out our business resolutions for the year. So we've started to do some big things. We've hired a business coach. We had our first like kickoff meeting with him yesterday about all the shit that we need to figure out to really start growing our business and getting away from the hustle culture that we sort of have. Because if you guys follow me on Instagram at Mike_invest, you might see all these videos of me like going to Africa and like doing all this stuff. But what you guys don't know is every time I do that, and the only reason I can't do that is because Dan is tied down with 2 children and he has no freedom. So he can.
And if you follow me on Instagram at InvestorManDan, You will see me walking random properties that are flooded in 2 inches of water.
Yeah, right. You will see nothing but disasters, and then once every like 6 month post, he'll try to like do some influencer thing, and then won't do it again for another 6 months. So it'll be great.
Dude, my Instagram is prime. You guys gotta follow me. It's the
Well,
shit.
you're using
I have the best.
You're starting to use AI now. You don't have to do it at all anymore.
Dude, that was legit. That AI stuff, I gotta stop talking about it because I'll just talk about the rest. That is just like ridiculously cool.
Yeah. Well, I mean, it is crazy though, honestly, because like, like it's gonna completely change the entire media and copywriting sphere. We've already talked about this over the last couple of weeks, a couple times, but just like any sort of social media content, like right now, you could have a business Instagram that you never even touch. You don't even need to have a team for. You just need to have a VA and access to one of the AI things, and they will be able to do 95% of it.
Just regular posts for it.
So
totally.
all of a sudden, a lot of these people, especially like these text-based social media things, like there are people that have legitimate social media followings that always just do like the little carousels or like the different like tweet posts or things like that. They never actually create any videos. Like even though they'll post like a meme or whatever, but you could very easily have that account now that is run by a VA and a chat.
Yes. And you might be a naysayer and be like, well, everybody likes to watch TikTok videos. Well, guess what? They have video AI now.
They do.
That they can create a whole like conversation with the computer.
I know.
And it's a person talking, an actual video of a person talking.
Dude, so with that thing, so this other one that we saw recently, yeah, it's like the, what do they call it? The deep fake, right? That they've now marketed and made a product. Like you and me could go and you just like send them these, like there's like video of you and these like photos of you from these different angles, and they create the virtual version of you. You can go and type in the script, and then what it does is they like give you a script of like you have to read, so it hears how you pronunciate all the different sounds, and then it just goes and like you can make a video of you.
Does it cost money to do that?
It's not that expensive. I want to say it's like $100 a month.
Oh, you have to pay reoccurring. I thought it was a one-time fee, and then you could have your deep fake. $100 a month's not bad if it can run my Instagram. I'll just get Maria to do all my scripting, and then just like all my posting, and have somebody else type it into the AI chat and make it work.
Well, see, think about it. They want $100 a month, and frickin' HubSpot wants to charge me $800 a month to have a CRM. Like that is a no-brainer, right?
No way.
So
Stupid.
But it is crazy though, man. Like I don't know what's gonna come with all this stuff. I actually saw this thing though that was really interesting, where the two things that are going to happen with AI that people are saying is, one, it'll change basically the entire like creative sphere in ways that we don't understand yet, and two, the buzz that is currently around it is going to make so many casual investors lose their ass when they start throwing money into these fake like AI companies are jumping in, or these different IPOs or all this sort of stuff that like are just riding on the bus string. 'Cause that happens with every sort of trend, right?
Absolutely.
I mean, even with like legitimate companies, honestly. So like you look at like in COVID, stay-at-home fitness was a huge trend, right? Peloton went public. That was like the hottest thing, was Peloton went public. Have you looked at Peloton's?
Peloton was the shit.
Have you looked at their stock recently? It's like down like 96%.
Yeah, it's dead, basically.
Yeah.
And they stopped manufacturing because they were so screwed up. Like they literally stopped manufacturing.
Exactly.
Which one of our tenants has a Peloton. I was like, dude, that's more than your monthly rent.
I know, right? But
I was like, I walked in, I was like, how do you have a Peloton in here?
Yeah.
It's not a nice unit.
yeah, but the point being is the fundamentals of a lot of these companies will be poor, and people ride on the hype train, and
They'll be the Pelotons.
Yeah, and they don't understand how to actually analyze the financials of the business, the story of the business, everything behind it. And lo and behold, I say casual investors, being anyone that isn't like a hedge fund is a casual investor, even if you're a
pretty much.
Yeah, even if you're a like quote unquote sophisticated investor, you're accredited, you have like a wealth advisor, those sort of things that says you should do this, and you go into these like fad businesses, these fad investments. AI is going to be the next one that starts to bite people as all these companies start going public.
Yeah, because they're just because right now like there is application, but if you're not paying attention, nobody looks at the application, right? Or there's not enough hype around it. But now there's going to start getting a lot of hype around it, just like Bitcoin and all the other crap that we saw. Now we got guys like SBF, who is, by the way, pleading not guilty, but his girlfriend pleaded guilty.
Yeah. I know. I saw that. Well,
Interesting.
I mean, surprised.
Sorry, that just popped in my head, but like that is important news.
Yeah, surprised. I mean, you take a look at her, and anyone who honestly thought that she wasn't going to fold under pressure, like you could just.
All right, she's a nerd.
Yeah.
She's a total nerd. She's not my like. What do you call that? Like ride or die. She's not a ride or die, dude.
Yeah.
Not one bit. Yeah.
But
SBF, dude, like that dude's like, no, I'm not guilty.
I know. Well, that whole FTX thing is just crazy though. And then it's funny because like as he was starting to get prosecuted, also found out he doesn't have any money. Like, you know, he doesn't know where it all went. He didn't even have $100,000 in his account. Just post a $250 million bail. So
well, did you see how he did that? So he actually didn't pay 250.
Okay.
That's what I thought. So his parents basically leveraged their $4 million house, which I think they're down in Stanford area, Palo Alto. I don't know exactly where they live, but like is probably like a little 1-bed, 1-bath, like shitty little house because they're professors, right? Who knows?
Dude, they're Stanford professors. They're probably making like fat money, dude.
No, you're right. You're right. But for the area, I'm just trying to balance it out, right?
Yeah.
For the area. But you're right. They probably do make $700,000-$800,000 a year as professors, which is ridiculous. But they leveraged their home. They leveraged it. They didn't actually pay $250 million.
So they just like put up their house,
which is kind of the whole scam of the thing. Exactly. All they had to do was like, I think they had to put up their house, and then they had some other people unlisted that actually helped. And so I'm sure there's a whole nother conspiracy behind who helped do that, but they didn't pay the full 250. They just had to post like 10% of that.
Yeah. God. How far is this going to get before the dude gets Harvey Weinstein? No, Harvey Weinstein. What's his Epstein?
Harvey Weinstein.
No,
come on,
that's the wrong one. Before he gets
Jeff
Jeff
Epstein.
Epstein. Yeah, I don't know where Harvey Weinstein came. Not the rapist. Epstein's
get all
rapist
Jeffed.
too,
He's gonna get all Jeffed.
Yeah,
hang himself off of a bed that he's taller than.
Honestly,
but he sat down and hung himself. That's just how it works. That's exactly how it works. Yeah. Just sat down and hung himself.
Yeah.
I don't know if he'll get that. I don't know. We'll see.
I mean, yeah,
because I think he'd be dead by now if they wouldn't have let him post bail. They would have made sure that it didn't happen so he could Epstein himself.
Well, I mean, I don't know. Like it all depends on how stuff starts to come out in the wash too, because it's highly possible that whatever's going on in the background, they're just like, oh, just keep this part under wraps and we won't kill you. And if he becomes like the scapegoat for it, right, of all the other stuff, then who knows? But yeah.
Here's what I think. What happened is if guys like you and me would have built a $10 billion company just like we're building our company now, we're like, I think this is how I do it. I don't know. Can we use QuickBooks still? We're not like he's using QuickBooks, right? He's like, I think, a little loan here, a little loan there. He just did it on a scale that was illegal.
Where he's hanging out with like Tom Brady and all these other fucking
exactly. And he's taking and he's unethically taking investors' money and like just loaning it to himself to buy weird shit. Yeah. But I feel like I wouldn't have been able to manage that scheme one bit.
I feel like you could. I feel like you have self-limiting beliefs, Dan. You got to believe in yourself a little bit more.
I guess so.
Yeah. Anyway,
good for him.
Yeah.
Good for him. He's out on bail. Big news.
How did we even get on this topic? I don't know. I feel like FTX is old news too. By the time this comes out, everyone's going to be so over that. But this is current real estate news that I do like, though. Is still in the pop culture realm. Sorry, this is a business show most of the time. But I thought about this specifically because with triple net real estate, everyone's always like, you get high quality tenants, and your triple net real estate is like the best that you can get, right? It's just like they always, I forget the term that they use, but it's like for the super high performing companies, they'll like, get like a Walgreens or like an emergency room, like that. That's break resistant.
A Nordstrom's,
a
good anchor tenant or something.
Exactly. Facebook. Everyone wants to have like a Facebook building, but all the people that own the Twitter offices are now getting wrecked. As like I saw that Twitter has stopped paying rent in both their San Francisco office and their Seattle office. It is now being evicted.
Right? They're probably like, we don't have any employees working here. We're just going to stop.
Well, yeah. I mean, it makes sense. I mean, he does.
Well, so what there was a sub headline to that. I don't know. I didn't do my research. Fact check me on this one, please. That they are actively renegotiating their leases. And I don't know if in that said Elon was like part of that, which I would be very surprised if he was. But basically, the way I interpret it was they're actively renegotiating their leases, and they're like, we're not paying you.
Yeah. I mean, but like,
stop us.
yeah, well, like, what are they gonna do? Like, especially are they gonna sue them for? So like right now, so they owe about $200,000 in rent for their San Francisco place. Okay,
Which is probably 1 month. I guarantee it's like 1 month.
probably, and they'll just like
Because it's an entire part of a building.
yeah, and they'll sue him for $200,000. He doesn't give a shit. He's worth like 150 billion.
Right.
But
Well, and I don't know. It is interesting though, because like you can't evict them. Like, how are you going to evict them?
I think it's like any other process. So I guess how do you even evict a triple net tenant? I would assume it's the same process where you issue a notice to pay or vacate. Well, yeah, do they have the same sort of rules? Like, no, you can't go and shut off the power because people use that space. You know?
But also, are you really going to evict them if there's a chance they're going to start paying again? Because nobody's going to rent that office space right now.
So that brings up a great question about industrial and commercial real estate that I've never understood, right? Whereas, you're right, because like they will never stop. They will never, like no one else will ever pay that rate. Most people don't want to move. You know, it's gonna be very hard to find a tenant for that. So at what point does it even make sense to pursue action against them? And this is something that, like, when it comes to commercial real estate and industrial real estate, that I have never understood because, you know, they always say you get these good tenants, all sorts of stuff, but you put so much weight into the fact that you believe that these companies will be around for the very long term. Because even if you...
Especially if you're signing a 5 or 10-year lease with built-in rent increases and all that.
Exactly, right? But even if you, you know, you have that lease in place and they don't perform, that is so much more catastrophic than, you know, like a home tenant, right? Like a house tenant.
Right.
And I don't... It's funny. I think that just maybe it's just rare enough that triple net investors don't even necessarily consider that an option.
They would have to on like I would like imagine this like a strip mall or not. I don't know what that would be, like a strip building where like you have like 8 or 9 defined spaces in this building, kind of like a strip mall, right?
Yeah.
Well, I don't know about you, but like there's a lot of small businesses that think they're going to do really good and they go out of business within 12 months.
Totally. Yeah, but that's like small.
And so they're going vacant, right? Like,
yeah.
And so I think you would have to at least at some level account for that in your risk factors.
Like you'd think so, but like that's like small businesses. What about like places that are, you know, they have like a grocery
like
store,
Twitter.
or they have like a Well, I mean, in our town we have a Lowe's. There used to be an old Lowe's, and they built a new Lowe's in the freaking lot next door and moved over there, and now we've had this empty building for like the years, 5 years, longer.
Way more than that.
Yeah, like forever.
Like a decade probably.
So that property is now worth nothing because there's no tenant.
Based on the income, right? Yeah, there is no income. Yeah.
You know?
Yeah, what do you do with that? Yeah, you're absolutely right. Yeah, because you would have to basically expect to be vacant for long periods of time because it takes the leasing is so much longer.
Yeah. And the thing that I don't understand with this is because most of the people that we know, when they're buying properties like that, their goal is to do, you know, whether it's an industrial property, it's a commercial multifamily property. Their goal is to do some sort of value add, hold cash flow for a short period of time, and then exit through some sort of sale or refinance. Like not that many people are planning to hold it forever, especially because with the fluctuating finance rates, it doesn't cash flow if you get bank loan. Like you have to use private investor money. So you have to have an exit to pay those people off. And the thing I have never understood, so we have a property like very close to where we both live right now that is a new build apartment complex. They're trying to sell for like $7 million at a 3 cap, right?
Yes. And it's the ridiculousness of that is if you just assume basic loan terms, the NOI doesn't even cover the debt service. And we know, like, I don't know about you, but I don't know anybody that's paying cash $7 million for a building because it doesn't make any sense because the ROI for somebody that has that much money to invest is so poor on an asset, on a real estate asset that nobody does. I don't know anybody that just pays cash for multi-million-dollar investments on the commercial side of things. They're always getting debt service.
Exactly.
And they're generally the same terms. They're similar terms, right?
Correct. Even if they're syndicating money, they're still going and getting debt. But my point I was going to make is when times are like they are right now, where stuff is not aggressively growing, and you don't have every other dipshit who's jumping in trying to now syndicate money to buy multifamily and commercial assets, what is the exit strategy for all these people that are touting on Instagram stuff that they are still buying? Because it's not like it's not like a house. A house, you can go and you can get like a homeowner that's going to buy it and is going to live in it for the next 30 years, whatever, it's their own thing. You do not have that exit strategy with commercial real estate at all. You have to find the next dipshit that thinks that they're going to be able to finish the swimming pool or add a tennis court and squeeze like another, 0.5% of cap rate value on the thing.
Right.
But when you can't do that anymore because of the rates, like you don't have an exit. So what the hell do? You just wait and hope it gets better?
It's challenging. I think, if especially like you're saying, most people in the realm of, I guess, the people that you would know that are doing these things, they have to do a value add or like a repositioning of the property. Like an apartment building, generally speaking, you can't reposition it. It's an apartment building. Yeah. You either can increase rents, decrease costs, or somehow like add units or garages, you know what I mean? Something like that to where your NOI is increasing overall through compression of costs or increase of actual income. Like even that, like the $7 million place we were looking at, I was like, okay, maybe this is more of like a class, like mid-rise building. I was like, I could see you condoing this out. I was like, it doesn't even make sense to condo it out. You'd lose half your money. Yeah. So like, there's no repositioning of that property. So you're right, at a 3 cap, you're basically looking for somebody that's like, I have a shit ton of money and I need to park it here and I'm just going to collect 3% return on this money at a time when the cap rate spreads don't make any sense to do that.
Yeah.
Because I could put my money elsewhere and at least make 6.
Yeah.
Or I could just go. So this is where I did a little bit of research on this a while back. Is like you have to look at the risk-free rate of the treasury bond, and why would you invest in anything else that is less than the risk-free rate of a treasury bond? Because the treasury bond is considered the risk-free rate unless you think the U.S. government and the U.S. dollar is basically going to disappear in a period of time that you're investing in it.
Yeah.
Like, which we know where inflation's at, and I don't even know what is the T-bond rate right now. Can you look that up for me, Jared, our producer?
Jared, his name's Max.
I know who Max is. I thought we had a live producer named Jared.
No, I mean maybe we should. Yeah, I mean, and something too. Like maybe we're just completely ignorant on this. We must be. I feel
probably
like,
a little bit,
like a little bit for sure. So if we are, please hit us up in the DMs and be like, you guys are fucking idiots, and come on the show and have a conversation. Come on our Wednesday show where you can just have like a straight conversation about this. I would love to hear about why we are wrong and why, like, what honestly are your exit strategies buying these commercial style assets right now when there's no other idiots out there to buy your property that you're probably ever paying for. Because like that's been the game for the last 3 years. And I say idiots out of love. We are also idiots who are real estate investors and are about to lose our ass on one of our own deals. So shit happens.
We are idiots. Yeah, we're selling a deal at a loss. We had 2 properties flood in a week and lost 3 hot water tanks in a week.
Yeah, that sucks. We lost 3 hot water tanks?
I know, yeah.
What other
I didn't tell you about those.
No, what the fuck?
Yeah.
Oh, man, I
just shit popping up.
I just thought you were skimming off of our bank accounts, but I guess we actually have legitimate costs. That's good to know.
Yeah, all those handwritten invoices, those are just me taking money out of the bank account.
Yeah, Austin Plumbing. I was like, this looks highly suspect.
Wow.
But
doesn't anyway, have an LLC on it.
Yeah. But anyway, back to your T-bonds, though. So it says 2 years, 4.25, 5 years, 3.88, and 10 years of 4.13.
So that's really weird that there's an inversion. But so why would you go buy a property at a 3 cap?
Exactly. You wouldn't. Like, especially something that's brand new that, has no value add potential.
There's just no value add or repositioning.
No. I mean, you go increase rents maybe, but even then, like, that's kind of like the hairy thing right now. And who are you going to do? You increase rents, you're going to sell it to some other dumbass who wants to buy it for a 3 cap?
I know. Yeah, and I can assure you're not going to increase your rents right now.
No, you're not. So
not going to happen.
Yeah. Anyway, so I don't know. It's just something that I've been pondering a lot. Is I like we're gonna like pursue some properties like that, but we try to buy stuff relatively distressed. But like that's one thing as our network has grown, and I've started to meet more and more people, and we started to have more interviews on these podcasts with these different syndicators and things like that. I'm just like, people don't actually want distressed stuff. Like their idea of distress is like, like countertops are kind of shitty, and we're gonna like throw those in there, and we're gonna like fix all the. We're gonna give them all new windows. Like that is a distressed property that has old windows. I'm like, I mean, I guess if you can get a deal that's that good with just those things, but that's not really. I mean, I don't know. I just feel like those times are gone. You have to actually be buying big stuff for it to make sense right now. Like big problems for it to make sense.
Yeah, and who wants to buy a big problem?
Exactly. Yeah, and especially right now, there's also
Not the average person.
So, anyway, but yeah, so I've been thinking about that, and then I guess with our business wise, I mean, we're just sort of trying to figure out our SOPs and like our general growth for things as we're moving forward. And I think that the New Year's, especially right after the New Year's, is a good time to sort of prep to start doing stuff going into it, because like I know we found sellers are starting, sellers have been waking up actions before Christmas and starting to respond a lot more to marketing. Buyers are coming out with like their new goals, and our view has been if you can prep, I guess, like the processes right now when it's still a little bit slow. You should have been doing this over the holidays anyway. We're kind of finalizing stuff, so when things start to take off here over the next week, 2 weeks, 3 weeks, we'll be in a lot better spot as opposed to trying to run around like with our chickens with our heads.
Yeah, and if you don't do it now, you're not going to do it the rest of the year.
Totally.
Because you're just so busy.
Yeah.
You know what I mean? And I mean, we already kind of are busy. I mean, we just for like one client one partner, I would say alone, we have like 5 in escrow that are going to close in January. Mm-hmm. And I was just talking to him yesterday, and I was like, yeah, man, let's kick ass. It's time to get February filled up with closings too.
No kidding.
That's just one of our partners, and so like he's going to be busy as hell.
Yeah.
He's flipping one of them, he's wholesaling some of them, and he's I think taking down one of them, right? So like he's got a lot to go. So like it can happen fast.
Mm-hmm. Yeah, it happens super fast. I mean, well, and that's kind of the crazy thing too that I think just represents the way that the market's been over the last little bit. So like December, do we have any closings in December? I actually don't think we did. I think we had everything that got pushed back. We have 8 right now in January.
Yeah, we did have some, but they got pushed out to January, right? Yeah. So
we currently have 8 on the docket. We actually got another one signed around today, which will probably be closing very beginning of February, if not end of January. So all of a sudden we're at 9.
Beautiful.
So we went from being in like leisure zone when we were trying to get everything figured out to all of a sudden. So I guess from everything is closing between January 16th and January 27th. So that's 11 days. We're going to have 9 closings, I think. No, 8 closings. It's gonna be crazy.
It's gonna be wild.
Quick. Yeah,
it's gonna be wild, man.
So yeah, it's definitely. I think that the motivated seller side though, and the buyer side is going to start to pick up here really quickly as we get accustomed to the new rates. And
and we were all sitting there back kind of the last half of last year, kind of thinking like, buy. And this is what a lot of people were saying in a lot of markets was like, buyers aren't ready to, they want too big of a discount, and sellers aren't ready to accept that discount. But I think we get into 2023, we start having more alignment between buyers and sellers on that. Yeah. And we have people that are still doing stuff, have settled out, and they're still doing stuff. Like just last week even, I think 2 people reached out and be like, hey, what do you got? Like, what do you got? Mm-hmm. Like locally here. And so there's people that are hungry, they're looking for something, and those are the real people you're going to do deals with in 2023.
Yeah, absolutely. And I will also say that now that realtors, I would say like all the weekend realtors have been shaken out, right? Like they've gone back to their jobs that they had before 2021 or whatever the hell they were doing.
Right.
But the realtors that are still around, they have learned how to, I guess, like make offers on these deals for like with the current interest rates, asking for concessions, trying to get creative with different stuff so that buyers are still able to get into these more higher price point properties. Like we're seeing a thing that's really come right now. We actually might be about to accept an offer on one of our places for this, where they're asking for concessions on the deal that would essentially bring their their payment down low enough that it's like it's a much lower rate, but then the way it's all structured is because they're going to have less money that needs to go towards their down payment, they're going to like be able to afford it get approved for more or whatever the hell it is.
Right.
But because of that, I think flipping, especially if you're in like kind of that starter home price point, is probably going to start getting much more enticing to people, like to investors. So that's something that you should probably start to work into, especially like if you can like wholesales, work into your different, I guess like underwriting scenarios that you're looking at, your different exit strategies, bringing back some general flips and some wholesales. But I would absolutely stick to like the starter home price point. Like avoid getting into anything luxury right now, because I think that's still going to limit people. But I mean, there's still a housing shortage everywhere. There's a bunch of people that still want to buy their first home, and
right, and they still have jobs because the jobs are still pretty strong.
Dude,
it's just the rates. Like rates are like right now the only thing that is the hiccup in residential real estate that I can see.
The job market's insane. Like honestly, like it is What do we? I think we're at record low unemployment, and we listed a job listing just the other day. I had 87 applicants within the first 12 hours, and I shut it off. I was like, "What is happening?"
That's crazy.
You know,
which is honestly though, like what I would not think would be the norm, because there's so many jobs out there that people would be just like, "No, I'm good, dog."
Yeah. Well, I mean, I think
You know what I
it's
mean? Because we're at record unemployment, so why would we get so many job applications? But I'm wondering, because it's specific to this role, though, maybe there's some wholesalers that don't have act managers anymore.
I mean, that might be why. Yeah. Well, I mean, like we are a virtual business, right? So that appeals to people.
Yeah.
And then, I mean, we do plan to offer people better pay. Like it's not like McDonald's, right, where they make a minimum wage. So
Right.
like that definitely sounds to people, and I think that's a thing that you're seeing a lot is, you know, they always talk about like the wage stagnation. People are
Right.
more
Just true.
more sensitive to that now than they have been in the past because they have learned that maybe they are getting screwed a little bit by their employers. So when you come and you have a job that is virtual and is going to allow them to make potentially more money than they're already making, I mean, that's going to be very enticing to people. Because, like, I will say that I've talked to other people and they all have, especially service-related jobs that they're trying to fill, and they can't find anyone. I also think
Right.
that most people now, just the general vibe is they're like, I don't have to do service jobs anymore. I can do a virtual job that is more than that, right? It has more upside.
Yeah, I think service jobs are tough, and then on the trades side of things in construction, they just don't know how to do it.
Yeah.
Like you can't just go be a plumber or electrician or go build a house. Like if you haven't had that skill set, you're not going to just go do it. And a lot of people aren't willing to go and do the hard part and be the new guy in the trades.
Yeah.
So like, although there's a shit ton of plumber demand, but like they can't get it takes 5 years or 4 years or whatever to build a plumber.
Isn't it crazy
go through
that
the
used to
apprenticeship.
be like, yeah, right? That used to be the job that was like, oh, if you can't go to college, you're going to go be a plumber. God, man, that's so insane.
If I had to redo it again, I'd either be a dentist or a plumber.
Yeah, you don't want to be a dentist, dude. You don't, I think you have the fine motor skills for it anyway.
Oh, come on.
Most people,
Fine motor skills?
no, most people don't. No, my
Look at this.
One,
Look at this. Look at this.
one of my good friends is a
Yeah, that's
dentist,
fine motor
and he
skills.
said that's what weeds out most people is not that it's not their desire to learn, it's the fact that they don't have the fine motor skills to do like actual dental work.
Yeah, I definitely don't.
Yeah.
I don't have the fine motor skills, but I'd lie my way through it.
Yeah, you lie your way through it. Yeah, right. God, I was saying something else on the wage thing too. I can't forget what it was. The plumber thing. Yeah. So it's funny. I remember back in high school, there was this kid. He was a real dickbag. Someone was. I remember someone. It was not me. Someone was making fun of him because his dad was a plumber, and the kid's like, yeah, my dad's a plumber, and he makes $85 an hour. What the fuck does your dad do? And I remember sitting there thinking about that, and I was like, shit, plumbers make $85 an hour? And that was a lot. Right? And it's funny because I knew that this guy was making fun of him. His dad, like, worked in some office doing something super basic and definitely made less money than that. Yeah. I'm like, dude, that dude's dad now, if he's not in prison, probably makes like $300 an hour in Bozeman, Montana as a plumber.
Oh, dude. Well, that's the other thing is you can own your own business, and that $85 an hour does go to $300 because we have plumbers in our town, the companies that will charge $300 an hour. So you know the company's skimming off the top of that, and they're probably not paying their guy all $300.
Yeah.
So there's a lot of opportunity.
Yeah.
And the best part about that is I saw a meme the other day on the interwebs that was like, the worst part about growing up is realizing how stupid most adults are.
Honestly, though.
Totally. And in alignment with that of like how uncool their jobs are. When they go to work, they're just an idiot.
Totally. You know, it actually is crazy. I remember like being like a kid and going to do like, I don't know, random things. Like, you know, you go to like Hawaii and you go like ziplining, or you like are like going and getting on like a bus, you know, and you have absolute faith that the adult that's in charge knows what they're doing. Right. And now I get on it. I'm like double checking their work. I'm like, is the Uber driver sober? Like, I don't know. Like,
right.
Faith is completely
well, it's like
gone
when I, as an adult, I went skydiving, my first civilian skydive, and I did it tandem with this dude. What was his name? Was Trinity, and he was hungover as hell. And I'm like, I'm putting my life in Trinity's hands right now. He's definitely smoked some weed beforehand, and like had this total vibe about him. And I was in this small ass town in the middle of nowhere at this shitty little airport. This airplane was like smelled like gasoline and just. I was like, well, I'm going to jump out of this. I mean, what's the worst that can happen? But yeah, I probably shouldn't have done that. I survived.
Yeah, no, it's funny, man. It's so interesting. Anyway, yeah, different perspectives. I don't know. All right, so kind of at our time already. What is your number one goal for the new year, Dan? That's if you had to pick your primary goal for business and personal.
Oh, buddy,
I just put you on the spot with that. I know you didn't.
Yeah, I haven't thought about it. I would say, like, if I just, like, what's on top of mind right now, business-wise, is being able to delegate and hand off a lot of the work that doesn't need to be done by me, and finding the right people to do that and having confidence and trust in the people that I bring in so that I can now work on the business and think more strategy, which is what we're trying to do right now as we set goals for the business. I would say personally, man, I don't have one thing yet, but I really would like to get out of my house and do more adventurous stuff this year, or just travel stuff, because as you know, I have a baby and this has been a long winter, and we spent all summer taking care of a brand new baby, and now we're going through the winter, and it's just winter kind of sucks up here sometimes, right? It's just kind of a bummer, and so it's nice to get out. So that'll be one of my goals for 2023 is to get out and do like more shit.
Yeah, I think that's perfect. I mean, so it's like my personal goal is about the same. So I have a goal of once a month for my personal stuff. I want to do something that I like is outside of my normal routine, right? Like some sort of activity, whether it's something like small, like I go.
Like a consistent activity?
No, not
or like a one-time.
Just
activity.
like a one-time thing, something that's like different. That like will be like a check mark like in my life, like a
bucket list thing.
Yeah, not like a bucket list thing. Even something dumb, like I don't know, like
simple.
Like
okay.
Going like go-karting, right? Like I'll like do that.
Have you never done that?
I have, but like I haven't done that since I was like 17.
Yeah.
Yeah. But like I do that, and then like the next month, I don't know, maybe we go hike somewhere new, or like we.
Oh, once a month. I see what you're saying. Okay,
yeah.
I missed that part.
Yes.
You're saying like just try to do a new thing every month.
Yeah,
I like that.
Because otherwise what happens is you kind of do the same shit. Like even if you like have an activity that you like me and my wife like to do outdoor stuff. If we don't do something that's intentionally different, then we'll go to the same places. We'll go mountain bike the same places. We'll go hike the same places. We'll go hang out at the same restaurants, whatever. But if you do things that are slightly different, it changes your perspective of time, and I think it creates more, like, I don't know, like memories, or just like gives you a more fulfilling sort of.
No, you're right. What is the guy that spoke at the Champions? The Spanx husband.
I know, it's funny.
The CEO of Spanx.
That's actually where I got the idea
Itzler?
from. Yeah,
Itzler?
Jesse Itzler.
What does he call that though? Jesse Itzler. What does he call that? There's like a Japanese term for
Kevin's
that.
Law.
Like the kebab or something.
No, it's Kevin's rule.
Kevin's rule.
Yeah. So I actually listened to the that talk, and it says he has like a friend of his whose name's Kevin, and that's something that he does. But they're like parents, so they do it every 2 months because they got like other shit they got to do. I don't got kids, so I'm trying to do it every month.
Yeah, every month. Yeah.
Yeah.
But there was something else big he said where like every year do one big
bucket list item every year. Well, so not one big one year defining thing. Right, so
yes,
you'll be able to look back and you can be like, I don't know, I did in 2015. It's like, oh, that's when I, went to Africa. Oh, that's
Kilimanjaro.
Yeah, that's when we started this podcast. That's when we got married. Like whatever it is, try to do like 1 year defining thing every year, and then Kevin's Law is to do something new every 2 months. I was going to do it every month, and then. The third thing he said that he does for like his epic life is once a quarter he creates a new habit, right? And he does that all the time.
That's too much for me.
And
I can't do that.
I don't even know freaking habits to add every quarter. Like that's
could you add bad habits? Because like I'll pick up some bad habits.
Yeah, right.
No shit.
This quarter I drink on Tuesdays. Like
right. But that could be a good habit.
I guess.
Yeah.
I don't know. But yeah, so anyway, but my professional goal for this year though is I want to get the business to a point of organization where our staff no longer feels like they work for Mike and Dan, but they feel like they work for our business. Because right now we had a big meeting with them all this morning, and it is like we've cowboyed this thing for so long. So much of it is in our heads, and there's definitely like we work for these two guys thing, and we need to get away from that if we're going to grow. So,
absolutely.
That is my personal
No, I like that. You articulated that better than I did on the business side of things. And I got to think about that 12 new things. That would be kind of fun.
Yeah.
I don't know if I have the time capacity. I might have to do it every other month because I do have kids.
You have kids. Yeah, and you gotta get them involved in stuff too, right?
I know.
So, but you should go listen to the recap on the Tribe Millionaires podcast though, where he talks about.
I did. That's how I remembered it.
he
Actually,
did.
I saw the talk too.
You saw the full talk, yeah. No, it's good. It's really good.
I didn't watch the full talk, but that's another great benefit. Like, this is not a plug for GoBundance, but that's just another great benefit of GoBundance is like there's no other way I would have gotten to hear that talk or seen that other than being part of that, paying my tuition and being part of that group is just the exposure you get to things like that, to where like it's simple, but you know, had I not listened to that, I wouldn't have thought of it.
Exactly.
And it's coming from a pretty powerful individual. Like I said, the Spanx CEO's wife, but he actually has his own business and is like a successful dude. Like they're close to I think $1 billion net worth or something.
She's worth over $1 billion. They're worth together, I think, like $1 billion and a bit. Because he's sold several companies and done very, very well.
Yeah. Very, very powerful company. I mean, just good people. And his like sister had died like 3 days before that, and he still made the event. Not that speaks to like his ability to, like, he doesn't care about his sister, but like that he said he values his commitments and he just needed to leave like 20 minutes earlier so that he could get to the services.
Yeah.
You know,
Yeah.
He's probably flying private.
Oh, he definitely is. Yeah. But yeah, I mean, I think that's a super valid point though. Of that is the value of joining groups like that. Like people always sort of scoff at the, I guess like the cost of things. And again, this doesn't apply for GoBundance, and we're gonna wrap up here really quick. But paying to be around people like that, right?
It's powerful.
It's super powerful. And also too, you're not only paying to be around the people that pay to be in the group, you're paying to be around all of their networks. And it is crazy how close we are to a lot of really big people in the real estate and business sphere just by being in GoBundance. Like we are like one person removed from a ton of the biggest names out there. You know, like who wanted like Brandon Turner, right? You know, Ken McElroy, Grant Cardone, like Ryan Pineda, like all the people that you see.
Bradley.
Bradley, exactly, right? All the people that you see out there that are kind of like the, you know, they have the BDE, they have the Big Dan energy, right?
Yes. Brought it out.
We're like one person removed from all those people. We know people that are direct friends with them because we pay to be in this high level mastermind.
They all have BD, tons of BD.
Tons of Big Dan energy. So
careful.
Yeah.
Careful what you say that.
Anyway, did you get your design done? It was supposed to be live by the time this comes out.
It will be live by the time this drops. I'm waiting. It'll be here tomorrow.
Okay. So if you guys listened to last week's episode, we're a week behind, but you can go and get your BDE Big Dan energy shirt they talked about last week.
Limited supply only.
Limited supply. Yeah. Well, I mean, we'll figure it out. We'll see if anyone even clicks on it, and then we'll go from there.
Yeah. If somebody clicks on it, I'll give it to them for free.
Oh, there you go. Hear that? So yeah, for the first 5 people to order a shirt, Dan will give it to you for free. That's what you just heard.
Yeah. I'll pay for your shirt. You got to DM me though. Or
no, go through the website. Go to collectingkeyspodcast.com/BDE.
Oh yeah, they can just click on it.
Yeah, /BDE.
And I'll give it to you. I'll pay for your shirt.
Yeah, for your first
5.
First 5. All right, you guys heard it.
Do it.
Anyways, all right, guys. Thanks for listening. Hopefully you got something out of this. At least you got a little bit of entertainment, if there wasn't anything super actionable.
Sorry.
But there's some good stuff in there. I mean, focusing on those systems.
I had a great time.
You had a great time. But please go and share this podcast with anyone who might enjoy it. Leave us a 5-star review on iTunes. If you do that and you send me a snap on Instagram at Mike_invest, I will send you a free Collecting Keys podcast t-shirt. We actually have had a couple people that have done that too, which is funny because like we have a decent number of listeners compared to the reviews that we have. And I'm just like, I feel like
it's a free shirt.
I feel like it should be at least like half to one, not like, you know, 5%.
You know what? I'll say right now, because you need to you need to get a Collecting Keys shirt, because one of our guys in our group, shout out to Dylan, basically got a deal by wearing his Collecting Keys podcast shirt.
You're right.
So.
He did actually. Yeah, and he might have a private investor too, because someone asked him about his Collecting Keys shirt that he was wearing, and he's meeting with a private investor that wants to give him some money.
It's a good subtle way to tell people you're a real estate investor,
yeah.
And that's when good things come to you.
With a shirt that's actually pretty cool. Like it's not super obnoxious.
It's so comfortable.
So anyways, leave us a 5-star review. Send me a DM at Mike_invest on Instagram. I will send you a free shirt. Up until we have 50 reviews, so we still got like 20 left, I think, to give out. So go and leave us a review, and I'll send you one. Besides that, guys. Thanks so much for listening. We'll talk to y'all next week.
See ya.
Thanks for listening. Please leave us a review on iTunes or wherever you get your podcasts. And check us out at collectingkeyspodcast.com for tips and guides on starting your own real estate investment and wholesaling business.